Up next, it's our chance to check in on both the grain and livestock markets. And joining the broadcast is livestock analyst Kyle Bumstead. Kyle, good day to you. Thank you very much for the time.
You bet. Thank you.
Let's start on the corn and soybean front, then we'll pivot over to the cattle. I know you like to spend a lot of our time focusing on that, which we appreciate. On the grain front, if we look back at the charts, when it comes to the futures, since about October 1st timeframe for both corn and soybeans, we've been going lower, lower, lower. Why is that in your opinion?
Oh, harvest pressure. It's harvest pressure. It's harvest time here, and I was talking with some producers here this morning, here middle of the week, and we're kind of in the camp that bean harvest is probably going to be all but wrapped up here for most of the Midwest here by the end of the week. And it's very interesting to see on some of these days. We've seen some big sell-offs here. We've seen the commercial spreads really start to pick up. So one spread that I'm really keen on watching here is that May-July corn spread. It's been gaining ground here. There's about 11 to 11 and a quarter cents carry out there from May to July. So it's kind of telling me that longer term, there's still some issues out there in the bean market as far as watching that forward curve out there. And South America's crop isn't in the bin yet, and they've had some chances of rain down there. They've gotten some rains, and there's still some more forecast rains. But if there was huge amounts of rain in the forecast where it was going to be a massive monster crop, I mean, you'd see that spread really build the carry, but it's kind of tightened in. Same kind of situation here with corn. Corn has this round number reliance, as some in the industry like to call it, and I like to use that term too because corn likes round numbers, and it really likes dime increments too. It's like, oh, here's $4, then there's $4.10, then there's $4.20, and so on and so forth. And then consequently on the way down, there's $4.20, then there's $4.10, then there's $4 on the way down. And so far, for the most part during the week, corn did a great job of holding the $4 mark here. Of course, we're not quite to the end of the week yet, but corn has been holding that $4 round number reliance there, and same kind of thing there too. The spreads have been slowly picking up, and we've seen some decent export sales here too. So when I see those spreads start to pick up during the day session, and it really kind of shows me that maybe the non-commercial selling is kind of getting wrapped up for the day, and then the commercials are coming in here starting to get some buy orders put in here, and there's some export sales being made. And in the case of the non-commercials here, last week when we got the Commitments Traders report out last Friday, they simply overshot. I mean, they had put on way too many. They'd put on quite a bit of length out there, maybe way too much length in a short amount of time, both corn and beans. And I think that this week here, they really kind of had to pare that back and get themselves kind of more rebalanced. So that's kind of the takeaway here as far as the corn and the bean market. And the wheat market, that thing there has been all over the board. We've seen it have some swings here due to geopolitical issues over in the Middle East. And then we've also got rain allegedly coming through here, the Midwest here in the hard red wheat growing areas here this week. And I really hope we get it. We could use some rain up here in Nebraska, but I hope they get it down there too, because I know there's a lot of producers that are sitting on the fence. Do we seed more or do we stop, or what do we do? That's kind of the wheat market in a nutshell there. And those spreads there are still pretty bearish. There's still a lot of wheat in the world, and there's still a lot of carry in that wheat complex.
Yeah, I appreciate your overview of corn, soybeans, and wheat. Let's head over to the livestock sector, Kyle. Begin on live cattle. What are some of the factors you're watching for that market?
Oh, live cattle, it's been crazy. They've been on a really nice uptrend here, a nice rally here the last few weeks. But I have been in the camp that we could see a setback, and I think we are kind of at that pivotal point here as we wrap up the week. Are we going to go down and test Tuesday's low in this December contract, that 185.55? If we take out that 185.55 on a closing basis, I think we could see the non-commercials come in here and sell this thing a little bit more. Now, same kind of situation here on this cattle complex, both feeders and live cattle. As we saw some deep sell-offs here in this complex this week, or bigger sell-offs than we've been accustomed to seeing, we did see the commercials come in here and start to buy this thing. And when I speak of the commercials buying here, last week they bought a lot of cattle here as far as fats go. The Packers got a lot of cattle, a lot of inventory lined up. So the question is, and I've had a lot of people ask me, when are the Packers going to start bidding this week? Well, I think it's going to be late week and maybe even Saturday. We're probably going to trade some cattle over the weekend here if they need cattle. But we bought a lot of cattle last week here, the Packers did. And those cattle are for deferred delivery too. So a little bit of an issue there too, that they've got enough inventory around here short term. Some of those cattle are slotted for delivery here at the end of the month. Some are second week in November. Some are even third week in November. And I do know a few feed yards up here in the north that are getting some big cattle here. It's been really good, decent growing weather here for cattle. And some of those cattle are tipping the scale 1,800 pounds. So I do know some folks, if they get a steady bid, they're going to take it just because they want to get some wheels underneath some cattle here, because they're starting to lose some big ones out there. On the feeder cattle side of things here, same kind of situation here. We're seeing a decent rally here. There's been a lot of interest here in feeders, but the ballers are coming to town right now, and there's going to come a point in time, I think, over the next couple of weeks here, we're going to start to enter into a holiday mode or holiday type trade here on this feeder cattle market here. And you're going to see less sales, and you're going to see less feeder cattle going into that index number, and that's going to have an effect on this market as well. But on the pullbacks, we've seen some decent commercial support, but on the same token here too, we saw some decent sell-offs here this week early, and it was on Tuesday as the funds kind of positioned themselves here for the Commitments Traders Week. They simply kind of overshot themselves here in the cattle and feeder cattle market last week too. I think they got themselves the cart ahead of the horse, so to speak. They got a little too much bought, and they kind of had to pare their position back here and see if the commercials are going to catch up and try to support this market too.
Okay, real quick, Kyle, I want to get your thoughts on box beef prices. Where do you see that market right now? Where's it headed as we prepare to end up, it's hard to say, but as we go through that holiday season and look to a new year?
Yeah, that's a good question. And I know there's been a lot of talk and chatter about the box beef market. And speaking of box beef, I think if boxes are to hold and even climb towards the end of the week here, as they've been climbing all week, I think you're going to see feed yards hold out for another dollar higher potentially here, at least up here in the north. They're going to try to hold out for $1 higher. But to answer your question, looking at some of the numbers here, I mean, the government still tells us that everything's going good out there as far as the economy goes. So when that egg starts to crack, then I think the box beef market starts to crack. But we will get to a point here. We're over 300. We're well over 300 on the choice box right now. And I think if we were to get that up in that 330, 340 range, I think that might start to slow the consumer buying down just a little bit. But that remains to be seen yet. We haven't seen that yet, so we aren't even that high. So I'm still thinking this box beef market has some room to go to the upside. It's just how much more I'm in question of that here as we get into this holiday season. Typically, we see a decent holiday push here, and that's going to start here towards about right now, towards the end of the month, so we can get some of that stuff procured here for the holiday season.